Good morning, everyone. Welcome back to another episode of FarmCon Conversations podcast. Co-host Todd Loechler here with my good friend Kevin Van Trump. Kevin, you on board this morning?
I'm here, buddy. How things going?
Hey, well, I was looking at radar because, we're kind of keeping an eye on weather now, and I think it's the first time in at least 6 months, if not longer, that it's raining on both me and you. On the panhandle. You guys are getting rain right now, yes?
Oh, yeah, we've had a ton of rain as of late.
Yeah, we got our first rainfall really last night, and there's a ton of it south of us moving straight to the west. So anyway, the dust got settled on the road, but it's a start. So we'll see what happens. But you guys been getting a ton of it down there, or not enough to kick guys out of the field?
Every other couple of days, we've been getting pretty good rain.
Yeah.
I think next 2 or 3 days we got rain in the forecast again. So yeah.
Yeah, and we'll talk about that as we dive into.
Very kind of fell behind in planting, in the planting pace, because like I said, we've been getting quite a bit of rain, pretty timely, every other day or two. So,
what's been surprising me as we move into, the commodity, the corn, bean, and wheat, the guys I talk to, and then when I see the numbers, I must just be talking to the guys that are getting the wet and stuff, because I was surprised to see, that we are. But I guess we got started so early and fast and stuff. But now it looks like, and you and I had a good conversation yesterday on our staff call that, you don't have. I tend to see the stuff on Twitter and hey man, I get a little bearish, and you're like, dude, no, and stuff. But we do have 2 weeks of weather that's cooler and wetter, but we're so far ahead. I don't think there's going to be a whole lot of issues. Probably standard replanting. You hear anything other than? You don't hear any issues from your guys out there, are you, on the replant, changing acres yet on anybody?
Well, no. Like I said, I think, the squeaky wheel gets the grease, and a lot of times you hear producers on social media talking, just saying, hey, they're having trouble, or they had this happen, or they've had that happen. But I think overall, as a whole, I think we're planting season's going okay. I think we'll learn a little bit more from Joe. I really want to hear kind of more specifics on what's happening in Iowa a little bit, with boots on the ground. From Joe and his company and his business, but I think it's pretty much planning as normal, so to speak. We're close to the averages, and like I said before, 25 years ago, sure, that maybe be some concerns, but with technology the way it is, we just have to have some crazy things happen, not to get the crop in, 80% by say the middle of end of May, I should say, or towards the end of part of May. But, I think we'll be there. I think you're going to have some pockets of problems, but when don't we? That's kind of the answer there. When don't we on that?
Exactly. But what you said, you told me this before, all now, it's true that we can get planting done a lot faster, but is there any concern left out there? Okay, great, it's in the ground, but now these conditions kind of change. Let's say, it stays cold. It's still, people haven't planted up in Minnesota yet. I know that's a small speck, but is the emergence thing become more of an issue then over time, since planting, getting it in the ground is no big deal anymore from a timely manner?
Well, you'll start bumping into insurance dates. You'll start bumping into other things, final planting dates, and sure. I guess you push the crop back far enough, you start running into maturity, issues, and guys will have to run some shorter variety corn and back pollination up into a little hotter period of the year, which typically would be that August, instead of into middle August, where this is late July or somewhere in that time frame. So, you just have to see how the weather plays out. It's going to be all about the weather, in my opinion, from here. And like I said, I put a little bit of faith in Gary over there at Weather 2020, and his longer term forecast to me look pretty solid, and that's why we can get into it. Like I said, I think you got the market set. We'll just jump right into the corn, bean, and wheat coming. I think you got the market set up, as I've said in the past. You need three things to really drive a bullish market. You need strong demand, you need the funds to be on board with a bullish tilt, and you need a supply side story. Well, at the moment, we've got two of the three. We've got really strong demand. We've got good demand, I believe, in corn as far as the exports are concerned. And we've got solid demand, obviously, here domestic crush-wise on the bean side. So I think there are some good demand stories. There's even some talk that we could see wheat exports, maybe we tick higher 10, 20, 30 million bushels higher on the wheat export side of things as we come into the final part of the market. So there are some good, strong demand bulls in play here. And at the same time, you got the funds viewing corn and beans more as an energy source rather than maybe so much necessarily an oversupplied food source. And now with a lot of things out of position because of the conflict in the Middle East, you got the funds trying to defend a record large bullish bean position and a sizable, bullish corn position. So, you got two of the three main cylinders really firing here. And Todd, I mean, if you catch a weather story, hell, we're off to the races. And those are the three things that we had in, say, 2012. Anytime we took corn to $8, those were the three things we really had. We had good demand. We had the funds all bulled up, and we had a weather story come in and take play a little bit. So, I think, you got to be cognizant and aware that there's a chance and a potential that we could keep moving this thing higher. Now, from a producer standpoint, like you admit, I mean, we made quite a few sales in the last couple of weeks.
Let's talk about that.
Yeah, I mean, I think that's what we have to, I think that's where we need to sit here and discuss. And, as you said, we feathered in some old crop corn at 48, and that was kind of our play, Todd. So we sold beans too early, obviously. I thought I'd really, really pulled a good one. I got sold out of those beans when we got above $11. I was going to re-own them down there about 10-20. We didn't get down that far. I missed my re-ownership play. The darn thing took off to the upside, and there we sat. But I held back and didn't price really that much corn. So I still had 30% of the old crop corn remaining. We priced a little bit more corn when July hit and SEP got into that mid-480s, 480, 485 range. So we priced a bit more there. We still have some, another 20% still left to price. I think there's a chance we could even push a little bit higher. And then we made some 26 corn sales and some 27 corn sales up there closer to $5. Or I should say 27 was actually a little north of $5. But, I think it's a good starting point. I think you got to be priced something, and it's going to come down to each individual operator. What percentage do you like to personally price? And I think that's going to be based on storage, cash flow needs, and how you play, on your own operation. Like I said, I got friends and buddies that won't price a thing till after the crop's harvested. I've got friends and buddies that don't like to deliver, past November. They just don't want to deliver November, December, January, February. They take trips. They go do things with the kids. So they and all those are great, but that's, you got to design your marketing program and plan around that. So that's where I'm really not a big fan of cookie cutter marketing programs or plans. I just kind of tell you where I'm at and what we're doing with some of our, with some of the bushels that we control. And so, I like being about 30 to 40% priced in both beans and corn. I think, in new crop, we got some old crop still to sell on the corn side of things. I'm going to feather that in if we can catch another little bit, push higher here. And, wheat, hell, you got hard red, 27 wheat trading up close to 740, 730, 740, 745 range. And, I think you got to pull the trigger there, get started just a little bit to get an anchor in the ground, Todd. Like I said, you just get a stake in the ground and try to start marketing around that a little bit. Pivoting around that, you had soft red above $7 and you had spring above $7 for 27. So, I think you got to price a little bit, regardless of what regardless how it may play out next year. If you're going to plant wheat, you got to price a little bit. We've held off on pricing any beans, Todd, at this point. Just the back end of the bean market hadn't been as strong as the front end for us, and I would like to see things get a little bit higher. I priced that first. 35%, I guess, priced in to 40%, 40% priced in 2026. And hell, prices now are way better than where I'm averaged in at. I'm averaged in, I think, sub 11.50, and we traded close to $12 yesterday. So, I got to sit here on pause for a minute. I pulled the trigger probably, it looks like, a little bit too early, but from where I was sitting in our overall perspective, I didn't anticipate this war in the Middle East continuing to play out. I didn't anticipate that we were going to really push this bean market how we have from an energy perspective. And it's obviously where things are headed. So I think you got to be careful. I think there is room to the upside still. Like I said, you got the funds super bowled up, and you definitely have some strong domestic crush demand. So, kind of hang on.
Let me ask you.
I think it's going to get wild.
Let me interrupt and ask you on that point right there, because reading the report and in your comments right there, it kind of sounds like soybean sale regret, but I want you to speak to the psychology of it. Dude, it fit into your plan at the time. It's easy to look in the rearview mirror and say this. I think a lot of guys do that. So just speak to that point about, dude, I mean, move on, don't kick yourself. I know you're not kicking yourself, but I think a lot of guys would be, and it would affect their next decision making, don't you think? And what would you say to them?
Well, yeah, I mean, that's just the psychology of trading in general, or investing. I mean, over time, you do it enough, it doesn't even phase you. I've had so many. It's like being a great baseball hitter, right? I mean, shit, at best you bat 300 in the Hall of Fame if you can average it. So I mean, it's just each individual person. Like I said, some people don't like to be wrong at all. Some people it just drives them insane and makes them nuts. And but like I would tell people, the only reason I'm on stage talking over someone else is I've failed more times than most people.
Right.
So and that's it. It doesn't even, it is what it is. At the time, it's where we had our mark. And then I execute, and I go back to constantly Druckenmiller's statement in that video I shared and ran.
Right.
I think the key to Druckenmiller and his success was he's a great trigger man. And
right.
You want to grow. You want to grow up. You want to grow up in life to be a great trigger man. And trigger man just means you can execute. You spend all this time listening, and you spend all this time doing research, and you spend all this time making a plan and making a marketing, and then it gets there and you can't execute, or you waver on your decisions, and then you regret your decisions. That's crazy. I mean, you got to be a good trigger man, and if you're a good trigger man, you got a chance to be a good investor. You got a chance to be a great marketer of grain. If not, I think you're always going to struggle. So, I mean, that's what I would focus on.
No, appreciate that, man. Hey, we've highlighted the shift in fundamental sentiment, or the fund sentiment, from the oversupply to the supply strain, and what's going on in the strait and stuff like that, elevated input costs and the weather issues. I'm just wondering, how much of the narrative do you believe is already priced in? I mean, and what's going to go higher? I mean, dude, there's so much uncertainty with this. We got the oil, like you said yesterday in the report. It's all energy now. I mean, help us. This war keeps going on, even with the rerouting of supply chains. I mean, how much higher can this go from an oil or from an energy play where it drags up corn with it, you think?
Oh, well, who knows? I just said, I don't know. I mean, if you ask me any year how high corn could go, I'd say $8. We've been there before.
Yeah, I know.
That's a silly question. Just because you don't know. I mean, how long can I always say the market can remain irrational and illogical a lot longer than we can remain solvent. So, how high can it go? I think that's anyone's guess. I mean, you don't know what's going to happen. You got missiles being shot. You got boats being hit. I don't know that. I mean, if crude goes to $200 or $200, well, certainly. I mean, corn's going to go $6.57 without a doubt. I would suspect. I mean,
well, I guess. I phrased it poorly. I was just looking at your view of the macro narrative on things.
Well, do you have so much higher? Obviously, I'm making sales. So I mean, that's pretty self-explanatory. And I'm holding short bean position. So I personally didn't think it was going to go much higher than $11 in beans.
Right.
Shit, here we are at $12. So I mean, when we're at 13, I'll really be the dummy. But I don't know. I said my whole worry is I don't think the weather is going to be an issue. So
right. Agreed.
I'm only banking that on what I'm learning from Gary and these other weather people that I follow. So I'm just sitting here. I'm not making a weather bet right now. So I don't think the weather thing is going to come to fruition. At the same time, if these war headlines subside, which I have to imagine Trump going into the midterm, he's not going to let this oil price thing get out of control crazy. So I'm of the belief the weather headlines go away and the war headlines go away. And when both those go away, I think prices drop. And that, and that's my play. That's my thought. Could I be wrong? Oh, hell yeah, I could be wrong. I've been wrong a million times in my life. So, that's just my play. Now, if you want to play the other side of it, and I can argue the bullish side, like, it's nobody's business. I think there's tons of reasons that you could be bulled up here. I mean, just you can pick, like I said, any of them. I think you got a decent demand story. My opinion on corn demand is this. Yeah, exports have been strong, and I think they're going to stay strong. There's even a chance USDA maybe needs to bump that higher, 10, 20 million bushels. But at the same time, I think you could see a setback in ethanol a little bit. They may need to trim that by 25 to 50 million bushels, and I'm still bamboozled by the feed and residual number. I can't get my head around how it is where it's at, considering where we are with the cattle herd and many of the other things. So there's a chance that you could come in here, lower corn acres, raise exports. Those are both big bullish bets. But at the same time, you slash, you could cut a little bit off the ethanol, and you could probably take a swing at the feed and residual. So net, I think we're still swimming in corn at 2 billion plus 2 billion bushels. I think you're way at the upper end of the range, but you do have the funds wildly bullish. And from there, we see how this plays out with the war and the weather. If the war continues and the weather gets shittier, just the spigot shuts off and we dry out like crazy and get crazy hot, okay, now you're talking $6.50, $7.50, $8 corn maybe, right? Now, but I just don't think those things are going to play out that way. But like I said,
listen, I'm still learning how to ask you the right questions. I know you don't deal in that.
That's just the bet right there. That's your bet you're making. Is the weather to stay is the weather going to become a bigger problem, more widespread worry, and is this war going to, lengthen out and it get more widespread? Well, hell, both those happen. We're taking off even higher than this is nothing.
Yeah. Well, so you said,
I don't know if those play out, and that's the whole bet. Sure, you can sit here and hope that happens. I mean, I that's why I say I like to feather in some sales here. I think it's prudent, and just see where we end up.
Dude, I'm all on board in that kind of stuff for the sales for sure. You're where you need to be. But you mentioned that you said you can see setback or pullback on ethanol. Now, maybe I'm not thinking this through right, but if corn's on an energy getting pulled up by the energy and oil prices and stuff, and ethanol's benefiting from that, where's the pullback in ethanol coming from? You
use less oil, dummy. People ain't going to want to pay as much for gasoline when the shit's $8 a gallon. So
I thought that's when
But currently, at the current pace we're at, even if none of that was into the equation, I still think the USDA is going to end up having to cut 25 to 50 million bushels off of the corn use for ethanol. Now, you can say it could be a number of reasons. Maybe they're getting, higher output. You could say you got EVs on the road. You could say it's because exports, in my opinion, exports have been a bit of a disappointment for me. I thought they were going to be stronger than they had been. Now, maybe Trump goes over and inks some deal with China. I don't know. Maybe he inks some deal with some country, and magically we export a ton of ethanol. All I'm saying is the pace that we're currently on for the remainder of the marketing year, I think it's going to be tough to meet the USDA's number without some type of, something coming from Washington that gives it an unexpected bump higher. I wouldn't have thought that, 6 months ago. I just thought we were going to see a little bit more exports than we had seen on the ethanol side. So that's all I'm saying. You could get a 25, 50 million bushel reduction, and it really doesn't have much to do, Todd, with the war situation. It's just kind of our run rates out to this point. I think the war situation, though, like I told you, that could make the demand for ethanol a little bit more, just because you're going to see fewer. People are going to buy less and less gasoline. Would be the statement. So.
Yep. I think we covered it. Did we miss anything on the corn, bean, and wheat? I was going to jump into.
No, not really. I mean, I think we've covered it the last few weeks. I think everyone kind of knows our stance.
We have the story.
I am a little concerned about the wheat market. Don't forget, Todd, we got that Wheat Quality Council tour coming up next week. So, maybe there's still some room to the upside, because I got to suspect when they go out on their tour, I don't think they're going to see good things. I mean, and we had this frost freeze forecast here tomorrow, this week, midweek, and we had one before. So what I'm saying is, and it's hitting with rain and some cold temps. So when they go out on this tour, they may not see very good things. But keep in mind, the crop's a little further along with these late freezes, and historically, you worry about those freezes more in late March, but now you're into this May period. I've been smoked and burnt many times on the wheat crop coming back, where I thought it was done. I mean, wheat has 9 months. But there's a chance this thing comes back a little bit here, and that's what I'm saying. This tour, and if it's really bad on the tour and the tour that they do up in Nebraska after that, if those tours are bad and this wheat market kind of pops another bit higher, that may be it. I mean, that could be it. That might be the wheat looks, and it may be a peak a little bit for wheat. We'll just have to see how things play out, though, like we said, with the war and things in Russia and things like that. So we'll just keep an eye on it. It's interesting how this is shaking out a little bit.
Well, it is, especially we just talked to our neighbor who's got dryland wheat in the ground and talked about rain may have. So we'll see. I mean, I'm looking at dead wheat out the window, but like you said, it's got 9 lives, and maybe this couple tenths of inch will do something for it. So thank you for that stuff, Kevin. Moving into some macro stuff, man. I mean, we've been talking a lot. I mean, obviously things have changed a little bit with Fed rate cuts and what the expectations were and stuff, but with everything going on, I just want you to paint.
Todd, I will back up one second, because I know there were some people that asked questions. I am long soft red winter over hard red winter. I just think there may be a little bit more tightness in that soft red winter ending stock number than people are maybe giving it credit. I think there could be some bigger demand maybe for milling wheat. If Trump goes into China and they strike a deal, maybe it's for milling wheat. I can't see it taking a lot of beans there, but then maybe they make a deal for milling wheat. And so I think that maybe the hard reds run a little bit, just gotten a little bit ahead of itself maybe in comparison to soft red. I'm not in the position yet, but I kind of like the thought. I've heard of some guys trading that are long D27 corn and short in D27 wheat. And that play makes a little sense to me. Just because the market were to pull back, I think you'd see a more aggressive pullback probably in that wheat market than you would the corn market. So, that's something also that we're keeping an eye on, Todd, is kind of how those spreads and some of those intermarket and intra-market spreads are working out and playing out. So, and I think the funds are doing a lot of moving and gyrating around in there as well, and some of those spreads that are creating some interesting opportunity.
Well, so you made me just start thinking about when you said China and the demand. I mean, on the soybean side, how would you make a bullish case for China soybean demand now, considering the population's going downward? They're getting rid of, the pork production is going down. I mean,
well, they already said they want to cut their soybean imports by what, almost?
Right.
I mean, it's a crazy number by 2025, and we definitely know they're pivoting and turning that way. I guess a symbolic gesture. That's my whole argument. It says I don't even think China could take another.
That's what I'm thinking.
From a storage perspective. I mean, I think that's where I'm just saying. If President Trump gets something done over there, I think it would be a symbolic gesture. That's it from Xi. Just, hey, great. We promised you we'd buy some more. We'll buy some more. It's a token. Here you go. And I don't know what China will do with that. But anyway, that would be the only way I see that playing out. I'm with you. I don't think there's a bullish story there. But that's obviously why I'm talking my position, though. So I think if anything they were to buy, maybe it'd be a little bit of wheat. Maybe they could book a little bit of this or that. Or maybe, like I said, seeing some cotton come into play. Or it's just hard for me to get my head around that they'd be a big buyer of beans or a really big sizable buyer of corn. But I've seen crazier things happen, and with President Trump at the wheel, who knows what he may get him talked into. So we'll just see how that shakes out.
Yeah, perfect. Thanks, man. So here we are with stocks, hovering there, all-time highs. We're in the middle of a war, or war on and off, whatever. Supply issues there, but I mean, just speak to paint the landscape on the macro side of things as you see it with the Fed rate cut, and I guess to answer this question, with everything's going on with the tech and the earnings and this and that, are we in a melt-up driven by AI and earnings, or are we one bad inflation print away from bulls getting caught off sides, which you kind of spoke to in one of the reports recently?
Well, I think that's the whole argument. You got the back end yields moving higher, and there seems to be a big shift here in what we're looking at from a Fed policy standpoint. It's kind of a double whammy, like I said. Yeah. I think you got a double whammy of the tariffs, the tariff inflation, and now you're hitting it with the energy inflation from the conflict in the Middle East with the oil. So, that has people worried that the Fed's going to get behind the curve here on inflation. They may have to make a more abrupt move at some point and hike rather than cut. And, if they hike rather than cut, you're going to catch a lot of these Wall Street bulls off sides just because from a stock valuation perspective, the valuations will be way over. They're already to the upper end. I mean, they're already stretched. Right. If you go and hike rates, you're going to see a lot of people kind of reconfigure things here, especially from a valuation standpoint. And I suspect you'd knock the shit out of the stock market on that type of move. So, me personally, I still think we're going to see a rate cut before we see a rate hike. But again, I could be dead wrong on that. The only reason I'm saying there is the camp that wants to argue we could see a rate hike just simply because the Fed wants to make sure, the press, the media, the rest of the world, that, the Fed's not being controlled by President Trump, and that, that there is, all of those things coming into play. So rather than cut, maybe they may have a tendency to be a little more hawkish because they don't want people to think they're, under his thumb or he's controlling them or whatever it may be. I think, though, that you have a large portion of the people that, we're worried about deflation. We as we head into this AI era, this new technological revolution, so to speak, I mean, there's a lot of talk and worry that deflation is going to be our biggest problem rather than inflation. It certainly doesn't feel like that, Todd, when you go grab a cheeseburger and fries somewhere or go to the grocery store right now. I'll tell you that. That I think prices are continuing to move higher. So I guess that's the big question mark. If they have to raise rates to slow down inflation, I mean, you're going to see a buckle in the stock market, and you're definitely going to see some people get hit, and slow down real estate, it'll slow down everything. I think that would probably be that would be our worst case scenario in my opinion. But I don't know. I'm just not sure. I just don't think that's going to play out. I think this Middle East thing's going to get behind us. I think energy prices are going to come down. I think it's mostly transitory. I want to say. I think it's because the supply side, is out of, the things are out of position, and that's creating the problems with inflation. I definitely don't think it's like you said. I don't think it's labor driven. We don't have a big push in jobs that's creating or inflation or raise in wages that's creating it. I think it's because we got dislocation on the supply chain, and once those things are fixed or somewhat come to better grips, I think that we're going to see precipitous rate cuts, and I think you're going to see 3-4 rate cuts. Maybe not obviously not this year or in 2027 maybe, but I think we see rate cuts more than we see rate hikes for over the next 3 years. So.
And you just touched on something on a follow-up question. You just kind of covered it, but I was going to ask you if you agree with Jim Paulson, the former chief investment strategist at the Loechler Group, who basically said, this is not the stagflation setup of the 70s because that was a labor-driven demand side thing, and this is flood. So, I mean, so you basically agree with his sentiment that we're looking at a different kind of inflation environment than the 70s.
Well, I don't know if it's his sentiment. I mean, it's Wall Street sentiment. I mean,
we ran his story. We just ran his comments the other day, so I'm just using those as my reference.
Yeah, I'm just saying. I mean, I think that's that whole thing. I mean, why the Fed hasn't raised in and of itself. I think it's somewhat transitory. I think it's the dislocation of the supply chain, and so that's my opinion. Like I said, I think there's more deflationary waves coming that we kind of have to be aware of. So yeah.
Okay. Staying on the AI topic and kind of moving into investing a little bit. Well, actually, I want to touch on labor again because we've run a few stories recently on labor and the thoughts of what's AI going to do to displace labor, and then yesterday's report, Bank of America threw water on the AI jobs apocalypse panic. I still take the other side of that only because I just think this time is different on that stuff. So you just to reiterate, yes, you said it before, you don't see labor getting crushed here exponentially from AI.
Yeah, I mean, I think it's pretty much like anything. I think I think the first wave, yeah, I think you're going to see some cuts. I think we've seen that at some of the bigger tech places. I think you're going to see some cuts due to AI, but I think you're going to create new jobs, you're going to create new opportunities, you're going to create new businesses, and new things are going to come and be spun out of it. So I'm not really doom and gloomer. I'd have to see more evidence of that. At the point right now, I just don't see that. So I do worry. I understand what you're saying, and I hear the argument on that side, but historically, if I go back historically, I think, there were major, when you went to a steam engine from a horse, when you went from this to that, I mean, everybody was going to be out of business, everybody was going to be out of work, and it never really played out. So it's hard for me to get my head there to think this would be the first time in all historical history.
I get it. Data's on that side, but now and whatever. It'll be an evolving debate for sure on that one. I mean, do you think? I mean, we also ran a story staying with the AI play. The clock's ticking for big tech to make AI pay out and stuff. And so, I mean, a lot of people are drawing comparisons between the late 1990s .com era, which you were a trader during that time, and the massive spend, the massive infrastructure, and the huge depreciation hit stuff. I mean, what are you taking away? You lived through that when you're in the middle of this one or the start of this one. What is your take, lessons that we can learn now that you drew from back then on once it played out? Or are there any or is it just different set of circumstances?
Yeah, I don't know. I try not to do that as a trader and investor. Well, just because recency effect. I mean, I hate to reference recency effect because it makes it it's just so easy in the mind to do that constantly. I mean, that's why so many boomers.
Sure.
That's why so many boomers have missed a run in the stock market. I mean, the 08. That period from 08 to 2010, I mean, just shook people to the core, and the recency effect mentally kept a lot of people from staying about or reinvesting in the market, and they missed the entire move. So, I don't necessarily, I don't like to play that tilt.
Yeah.
I like to stay moment, and in the moment, you've got earnings better than they've ever been. You've got beats beyond all beats. You've got revenue and profit margin expansion and growth like we've never seen, and the market's at all-time highs because of that reason. So I don't see a .com bubble at this point. Like I said, I would have to see more people borrowing to buy in, and I just don't see that. I see more skepticism still. I just see a lot of doom and gloom people talking, a lot of people talking what you're talking there, talking recency. Yeah. I think that seems to be the mindset more than what I felt during the .com era. I mean, during .com, I felt like it was just a crazy wild casino, and everybody was borrowing money to chase some of this stuff higher. And maybe that's the case with the younger kids, and I'm not younger like I was then. And so maybe there are some people out there doing a lot of stupid things and borrowing money and taking that money and putting it in the market, chasing and levering up and, crazily buying on margin and all those things. I don't think that's the case, but like I said, I'm running around a different circle of I'm not running around necessarily a different circle of people. We're all just way older. And being way older, we're making a lot of different decisions and a lot different bets than we were making when we were in our early 30s and, 20s, 30s in that era. So, maybe my mindset's just different, and I don't see that. But I don't see it playing out like the .com. Just like I did, there was a lot of talk we were going to see, farmland price. Hell, I heard this for the last 15, 20. We're going to see farmland prices do the same thing they did in the 70s. I've been hearing that for the last 15 years, probably, maybe 20 years. The farmland prices were just going to get decimated like they did in the 70s. And I took the opposite side of that bet, and I'm still taking the opposite side of that bet. And then I hear people say, the same thing's going to happen now in the housing market that happened in 08. I don't see that either. But what I'm saying is it's easy mentally and psychologically to use that recency effect and to then anchor yourself to it. And then, when you do that, it's difficult to take risk. And, that's where that whole mental game comes in. Are you going to mentally do
100%,
that?
100%. And that's why you excel in helping people identify and do that stuff. All right, as we move into your kind of personal investing and what you're doing, yesterday you wrote about, you're getting a bit more worried about the money flow and stuff. And just kind of for those that, maybe missed it, whatever, catch us up on your macro narrative and on that regard, money flow and what you're doing and how close you're staying to the exit door.
Yeah, I mean, it's similar to making the corn sales or the bean sales, right? Yeah, I definitely think corn and beans could go higher. There's no question. Like we said, if the war continues to play out and weather becomes ticket. Okay, same thing in the stock market. I mean, we're at all-time highs. We're trading at 22x. We're trading at steeper valuations. But I'm not going to be uninvested. I may just pare that back a little bit. I'm going to have a little more in cash, and I'm going to stay a little closer to the exits just to watch it if the herd changes directions and starts to run a different way. That's all I'm trying to say, and it's like my pops always tell, it don't hurt very bad when you fall out of the basement window, but when when you climb up the ranks, it shit hurts to fall from the top here. So, that's what I'm saying. I think you just got to be a little bit cautious. I think some of these places are spending quite heavily or made some big commitments, and they're all interwound. This has to happen for that to happen, this to happen. Okay. That's why I'm saying you can play it here, but I wouldn't be over leveraged. I wouldn't be borrowing money to chase the market higher. And I'm not trading on any margin. And like I said, I'm sitting on probably 30-40% cash and in what I have allocated to equities. And I'm just paying fairly close attention. And I'm mostly holding now larger ETFs. I'm holding a handful, maybe 10 individual stocks, and then the rest are the money is pretty much just in simple broad-based ETFs like triple Qs, SPY, things of that nature. So no fancy, this isn't, like I said, I don't like running triple reverses or trick plays at this elevation. And maybe, like I said, maybe it's my age, maybe it's where we're at in the market, maybe it's years of experience and not wanting to get injured, from a big tumble. So I'm playing it fairly conservative, but yet still staying invested.
And what you made any moves? I mean, since we last discussed your stuff, you done anything different? I know you said you stay in the big ATF stuff, but no individual stock moves, no special new art purchases.
Nothing that I would be like, people always want to call you some crazy obscure stock or like you're investing in Polish ETF funds.
I did not do that.
You did. You
I did early. And look at it. Look what it's done. Anyway.
And I think, I do like U.S. blue chip big tech, and I think it's going to continue to dominate. So that's why I like the triple Qs. And, I add a little on the brakes, and, you got to look at NVIDIA and some of the bigger name stocks. Amazon's obviously had a nice run here as of late, and that's really it. So, yeah.
What percentage of your portfolio, how do you allocate how much? Because you're big into, I'm going to call it alternative investments. I mean, the auction purchases, and for now it's the Western stuff. And
I'm an idiot on that. I mean, I'm an idiot there.
Okay. All right, well,
I'm
lead with
an
that.
idiot. I'm not. I mean, the reason I say it is because probably some of my best wins have come from that space. But, like Bob, Nimitz, he's like, I leave the collectibles market to you, buddy. Collectibles and art, because it is, and it is tricky, and it's not very liquid, and you got to be, and it's kind of a hustler type thing, and but I love that. I love all that. I like bartering, I like trading, I like hustling, getting out there and checking it all out, and thinking I'm getting a deal, and then go to the next thing, kind of move. But it's a hobby, more than anything. But it's
okay. But so what? 10%? I mean, if I'm a guy and I have the same less than 10% of your money that you got to play with, that you're going to go spend in that category, or more than that?
Because for me, I invest a shitload more than that, so it's not even.
I know.
Yeah, but I'm nuts. I mean, I'm kind of nuts on that. I have fun with it, though. I like I said, it's kind of became a rush to me, kind of like trading, and you start trading, you trade a few positions, and you're trading a 5 lot, you're trading a 10 lot, then you're trading a 100 lot, and then the next thing and you keep moving the bar higher to try, I guess, get your adrenaline going. So, that's kind of how it's been in the collectible space. And what a hell of a run. I just had Matt Chris text me last night. He was at a Cardinals game, and he was asking me about some Pokemon cards, and what a hell of a run that Pokemon market's had. I mean, it's just been nuts. I mean, I don't, like I said, outside of being in Bitcoin early, that's probably one of the best investments that we've ever probably made is plowing some money into that area. But it's just these collectibles that I almost feel like that shit moves around like the meme stock. These young kids, and you never know what's going to be next and pop next. So, we're putting a lot of money to work in the Western collectible market. I like the Old West. And maybe it's a personal thing, obviously, but I think it's going to come back around, and it's been hot. I shouldn't say come back around. It's been hot as hell as of late. But I think it'll circulate back again in 20 years, and I think you'll see another rip and run. So we're trying to, amass some things or some key items, and when they come up, and things that we can afford in our wheel.
Yeah. I want to cover one more topic before we bring Joe Sinclair on. Last week, we ran a story, business, and this is where I think you excel at, and you don't get enough credit for. I mean, all the business insights and training that you had and the experience you have. But you ran a story business building, the confidence character matrix, how to get the right person hired, the difference between being in the classroom and the courtroom. And I believe there's some details shared. Jordan had some inside stuff, but discuss that. Talk to the business owners and stuff on those things, because building a team, dude. I've watched you the last 5. I mean, it's really been a focus that I didn't see when I first started coming to work for him. But building a team and getting that right, how critical that is.
Well, yeah. I mean, my Achilles heel. I look back and I've seen, and I've met some great CEOs, some people that are really, I think that are really great CEOs through the years, and that's not me. I mean, I would not be that person. I could tell you maybe what to do, and I could coach people and tell them what to do, but me personally, it's not me. I'm more a Jason Bourne type, or kind of a lone wolf McQuaid kind of. Just I kind of got my own thing, and I struggle building teams. Honestly, I'm not good at it. I expect everyone to want to work as hard as I work. I expect everybody to go above and beyond, go the extra mile, do all these things, and I expect them to do, I guess, maybe more. I don't know. I just say I'm not. I've seen people that are good at building teams. I'm not good at building teams. So I've told my kids the whole key to businesses is your ability to build teams and get people to follow you and want to work hard for you and love you and all of those things. And I've seen people that are just phenomenal at it. And that's what I'm saying. I'm okay at it, but I'm not phenomenal at it. And I think that's where you really need to be if you want to build big businesses and you want to really get out there and make some things happen. You got to be a really good team builder. So, we spend a lot of time in our family focused on that. I tell everyone, Kennedy, my daughter, and I love my kids to death. And I told Jordan the other night, I said, Jordan's a little more like me. He's one of the hardest working guys I've ever met, and just hard working, but I'm not sure he has the traits and the skills to be a great, phenomenal team builder like my daughter does. My daughter, if she can learn the business acumen that Jordan has and some of the things that he has, I mean, she'll be much better at building teams and being a bigger CEO just because of some of those personality traits in the way she interacts with people and some of those things. So, and it's nothing against anyone. You need to kind of know, are you number two? Are you, are you the CEO person? Or, I think great number twos are people that are really going to work hard, be super loyal, and they can get anything done for you. Those are the people you have to have. But that's not necessarily, you heard what I said there, it's not necessarily a great team build. They're not really maybe building teams really well. So there's different dichotomies there. But, we really focus on trying to build that team because we know it takes people to get to the next level and to scale a business. So I think that's something that you'll be able to talk to Joe about when he comes on, because they've done.
No, definitely, it's on the list there. Let's go ahead and Joe, are you on there, Joe? Mr. Sinclair.
Well, you may have to hit him up in Texas.
I had you on mute. Sorry about that, guys.
Hey, Joe, welcome. This is Joe. Joe, I'm going to do a quick bio, then we'll dive right in. Today,
all right.
We've got Joe Sinclair, lifelong Iowa ag leader and founder and CEO of Quality Ag. Under Joe's leadership, the company has grown from a southern Iowa retail agronomy operation into a national wholesale agrochemical provider. Joe's regularly sought out by national media for his expertise as an ag retailer, and when he's not steering Quality Ag's growth, he enjoys ice fishing with friends and giving back to the rural communities that have supported his business. Joe's a very good friend and supporter of our FarmCon family and lives with his wife, Allison, in rural Melrose, Iowa, and has 3 grown children. Joe, good morning and welcome.
Thank you very much, Todd. It's good to be with you guys and everybody that's a fan of the VTR, the Van Trump Report, and FarmCon. And it's a good bunch of folks to have an association with it. A lot of positives and positive thinkers. I love that part of the Van Trump family. Very positive.
Well, you're part of that, my friend, and what makes FarmCon so great is you being in the room and guys like you. But let's just start now with the softball, buddy. How'd you guys get spend some family time and get away last winter and go anywhere, do anything fun, or you just grind all winter?
We kind of ground all this winter. Had as you advance in life, you have parents and in-laws that progress to the later stages, and my wife has to deal with that with her family this winter. So it kind of changed the winter up a little bit for us.
Yeah.
But it was still a great winter. Don't get me wrong. I'm a positive person, and I'm not afraid of the Grim Reaper. I think he'll have his hands full when it comes for me.
Thank you, Joe. Did you do any ice fishing? I know that's one of your big winter reset, mental breaks, recharge kind of deals.
Yeah, we had a good ice fishing year this year. We had plenty of cold to get the ice in southern Iowa, and we got a great group of guys that we go on Sundays and just everybody gets together. You have 2 guys per hut, go to a pond, drill a bunch of holes close to each other, fish until they don't bite anymore, and then go to the next one, and then at the end of the evening go to somebody's machine shed and butcher all the fish and finish up whatever cold beverages that you brought with you that you didn't consume while you were fishing. And it's just kind of a community event as well as a something to do in the middle of winter when there's not a lot of other outside things to do besides feed your cows and everybody.
So it is that regular, just like it is a regular event, just like a weekend summer golfing group. You guys are doing this every weekend, same kind of buddies, and it's a thing.
Yeah. Yeah,
okay.
Instead of your Wednesday night golf league, it's the Sunday afternoon ice fishing league.
Kevin, you ever ice fish? I've never done it. All right, Kevin may have taken a quick break. Joe, you heard us talking about
No, I'm here.
Well, I was just asking.
I had my phone on mute too. I'm sorry about that.
I've never.
I did a lot of. I shouldn't say I did a lot, but I did some ice fishing. I lived up in Chicago for a number of years, and we'd travel up to Wisconsin. We'd get up into some of the areas, get up into Minnesota. I went up there a couple of times. But I'd love it. I wish I just wish it would have been a part of my life more when I was younger, where I really knew what the hell I was doing. I was just kind of a spectator sport at that point. So, but no, I loved it. I could see it being just something if you're born into it. I mean, you'd want to keep that tradition alive.
Well, that's what it seems like to me. It's either you're raised in it. I mean, Joe, is this something you did your whole life, or was it brought on? Oh no, you're from Iowa. You've done it your whole life.
Oh yeah,
lifestyle.
Early going, you were sitting on a bucket out on the ice because your mom told you to go catch some fish, and that's not a very high percentage chance when you're sitting on a bucket on the ice and you get cold. But now we've got electronics and gas-powered augers, so it's a lot easier and it's comfortable. The huts are insulated. You'll start off with your jacket on and your Carhartts, and by the 15th minute, with a little buddy heater going in there, you got your jacket off, and it's just fun. And then something funny will happen. Somebody will drop their phone down through the hole, and there's all the fun things that happen when people get together. They happen there. But I grew up more hunting than ice fishing, and the hunting is kind of the early season. And then by the time the hunting seasons are all closed in January and February, you got the ice fishing to do. So just keeps you outdoors, keeps you active. And I think there's been some studies done that if you're spending time outdoors, you're a healthier mind.
100% agreed. Yeah, I feel it out here when I get stuck inside. Yes, that's good. Let me ask you, you mentioned hunting, Brad. Are you seeing things change up there for the price of hunting? Are you seeing more land to get maybe turned into strictly hunting, recreational property, and prices changing there? Is that something you're in tune with up there at all?
Oh, yeah. It's been going on since the 80s when CRP came into. You look at Kansas, northern Missouri, southern Iowa, a lot of parts of South Dakota and Nebraska. The biggest crop in many counties is CRP. It depopulated a lot of communities in northern Missouri, and I've got the answer for the high beef prices, and it involves CRP for sure.
Interesting. Well, hey, I want to make sure so you got a couple of kids, Hugh and Becca, is that correct? That's working for you at Quality Ag?
Yeah, Hugh and his wife, Becca. Hugh runs the operations part of our plant up in Jessup, Iowa, which is in north central Iowa near Waterloo. And they are up there expecting their second child. And Becca runs our freight for our wholesale logistics. And like I said, Hugh, he's probably doing the same thing I'm doing today, running a sprayer or a floater and keeping everything running at that plant up there.
So I want to bring in a two-pronged question. Kind of, you heard the end of our conversation on team building stuff. Before I get to that, I want to ask you about just bringing the family into the business that you have built successfully. And, has anything changed operational, decision-wise, strategy, and how you lead the companies now compared to when it was kind of just you and getting it going, based on the fact you got family in there? Has family affected that for you at all?
Yes, and I will say this about a growing business. You got to accept that you can't do it all yourself. You have to hand it off. You have to delegate, and you have to let the mistake get made. And you hate to see the mistake get made, but I'll give you the example of when Hugh was learning how to fly. Hugh and I are pilots, and I rode in the backseat of a 172, and he's getting ready to make a horrible landing, and his instructor doesn't do anything. And we bounced that thing, and we bounced it again. Afterwards, I said to the instructor, who's a friend of mine, I said, how come you didn't grab the yoke? He goes, Joe, he has to make that mistake. He has to feel it. He goes, if he's not going to break the airplane, I'm not going to keep him from making a mistake, because he has to feel that. And it's kind of the same thing in business. You kind of have to feel your way around it, and you feel it in the seat of your pants that maybe things aren't going right. But when the mistake gets made and the airplane bounces, then you know, okay, I made a mistake, and you can learn from it. You try to teach as many mistakes as in mistake prevention that you can, but there's just some things that it takes 10 years to get 10 years experience.
No doubt about that, for sure. What's your thoughts on what we were talking about on the team building and stuff, and have you, give your insights, and you've obviously done it, I take it, with success you've had on building a team, or, getting rid of the folks that aren't, or getting them trained up properly, and then getting rid of the ones that don't match their value structure.
I would say that I'm maybe not as good at it as some other people. I might be in the same bunch with Kevin, but I got people that work with me at Quality Ag that are really good at it.
Right.
Our ops manager in our retail locations, his name's Kevin Griffin, and I mean, he manages a team, and people love to work for him. They do. He remembers stuff because he came up through the ranks as, the guy driving the tender truck and then the guy driving the sprayer, and now he's running the ops. On our wholesale, it's the same thing. We got a guy that's managing that team that he'll drop everything he's got going to help one of our wholesale guys find a product that is in short supply, or negotiate with a vendor that needs to get their price right so that our team can be successful. So I'm a big fan of hiring the right guy right person. It doesn't have to be a guy. Probably the most critical person in our organization is a woman, but it's something that it takes patience, and you just need to make sure that when you make a change, that it's well-founded in observed behavior. Yeah,
no doubt about that. Well, let's get a boots on the ground report from you down there in southern Iowa as to what is happening in reality, how things are going on your farm, what you're seeing and hearing from just the planting, emergence, and stuff like that, and the weather as it is now, what you're here seeing. So give us the update, my friend.
We are still a little bit wet. Got a couple tenths of an inch yesterday. There are pockets that are almost 60-70% planted, and pockets that haven't started yet. But we are not late. Even though we were all done planting 1st of May last year, that was an abnormal year. But it's a normal year, and the changes that were made by our growers were made. Those decisions were made a month or two ago. The decisions about planting population, fertility. We don't have any fertilizer shortages. We pretty much got everybody bought up on fertilizer last summer, and I don't know what the next go around is going to be for pricing, but our retail customers are enjoying 2025 prices in 2026 because we got bought up pretty early. So we'll see what happens for 2027. But
so what do you do? Go ahead. Well, how are you positioning for that right now? I mean, that's kind of one of the big questions. I mean, because the uncertain. What narrative are you believing that? Are you going to be able to get the stuff? Are you already trying to forward contract and take some risk off? Or what are you doing? We're looking that far ahead to 27.
Well, I'll just go with the macros. With nitrogen, it's out of whack, and everybody knows it's out of whack, and it's not going to stay this way. Everybody knows that. This Gulf War will get over, and there are piles and piles and piles of fertilizer that were built in the Middle East, sitting on ships, looking for a place to unload. So it'll be a rapid decline. It'll be a rapid decline. When's the war going to get over is the question. And yeah. I think the war will be over before we go to the field next year and need our nitrogen. I really believe that. And we got fantastic domestic production. We're exporting nitrogen right now is the reason why it's so high. So once those Middle Eastern exports start heading to Brazil and Europe, we'll be back to a domestic market and should be a nice correction on nitrogen. So don't get in a hurry on nitrogen for 2027. It'll come to you. Potash is pretty fairly priced right now. There's some concern with our monopoly North American potash producer that the Ukrainians are going to be able to crank up production and put some pressure on their market. So their strategy will be, and always has been, to have an attractive offer to fill up all the space available in North America so that the ships that have Ukrainian and Russian potash on them go right past our ports down to South America. That's going to be their goal. So it should be a good opportunity to fill on the potash. The phosphates, we still have countervailing duties on phosphates. It's really ridiculous that those are in place because you got Mosaic exporting phosphates while we got countervailing duties coming on to prevent imports from coming in. And I don't know if you guys know how those countervailing duties work, but the importers don't know what the duty will be when they import it. So they'll import it this year and won't find out until April what the duty is. And to me, it's an un-American thing. The reasoning that the International Trade Commission gave when they imposed the countervailing duty was that even though the Moroccans and folks over there were not subsidizing the production, they don't subsidize it, but they don't regulate it the way that the EPA regulates Mosaic, which is basically the sole U.S. manufacturer of phosphates. So they said that the playing field was unfair because our EPA is meaner than Morocco's, and the duties are on, and they import it and find out later if they sold it too cheap or too high when they get their duty.
Wow.
Yeah. And sulfur's through the roof right now. Yeah, sulfur's through the roof.
How much is that? Is that how much is that domestic versus import production?
On sulfur?
Yeah, I don't know anything about
that. Sulfur comes from Montana and Canada and oil. So they scrub the sulfur out of the oil when they refine it.
Okay. Okay.
It used to be we didn't have to put sulfur on because you remember that term acid rain? Was sulfur.
Yeah.
Sulfur was. So now they scrub the sulfur out of the fuel and then sell it back to the farmers so they can put it on their fields. So that's where we get it from. Yeah.
Hey, Joe.
Yeah.
Question. What the hell are you seeing? What are you seeing guys do out there? You think people are going to cut back any acres, or not where you're at? Surely there's nothing changing there, is there, Niall?
No, there was a slight switch of continuous corn that rotated to soybeans, but we even had some guys that were planning on planting beans, and then the price of corn bumped up to, they could get $4.70 for it out of the field, and you switch back to corn. So,
no, I hear you. I thought too. I hear that. So, and I haven't seen anybody pulling back on it. You see the news and how CNN will run headlines that, we're cutting all these, we're going to get decimated by this higher fertilizer price and cutting all these. I just don't see these acre cuts, at least not happening.
Well, look at the ethanol business. Ethanol, a lot of farmers got stock in ethanol companies, and ethanol is so profitable right now. The spread between ethanol and gasoline has never been higher, so the demand for ethanol is as high as it's ever been. And those companies, they're comfortable paying $6-7 for corn right now, and they don't have to. So they're just
You're right.
They're printing money. You were a lot better off putting all your money in an ethanol plant, which was the big fad here about 15-20 years ago. Kevin, I think you're probably old enough to remember. I was thinking about your investment, the Pokemon cards. Do you remember when the craze and everybody's throwing their life savings into ostriches and emus?
Oh yeah, that was nuts. That was nuts.
I agree. And
you still got one?
And so I've never been an investor in ostriches and emus, but I've got friends that are pretty sound-minded that jumped in it with both feet, and they found out that they can only eat so much of their own ostrich meat before they converted their ostrich paddock.
They got them a little learning. Yeah, exactly.
Yeah.
No, I hear you. Yeah, you're not seeing it. Yeah, that's what I was curious if people were pulling back or dialing back. No, you guys are.
Yeah, the adjustments were made earlier. But
Joe, let me ask you, from what I heard you say, I mean, it sounded to me like you made it real easy for your clients to kind of operate as usual, meaning with the pricing you gave stuff versus, because I was going to ask you kind of along Kevin's line, what changes were guys doing? How were they adjusting to save some margin and stuff? But it sounds like you kind of did a lot of the heavy lifting for them. Is that a fair assessment?
Yeah, and some of our guys that were in, cash flow situations, and their bankers were telling them this is all you're going to get. There were things that we could do to mitigate that. We changed the hybrids to where they could, instead of planting 36,000 of a $290, $350 product, plant a reliable flex year hybrid at 26,000 that only cost you 200. We did things like that and lower the goal from 300 bushel corn to 225. And 225 on good ground is reasonable. And it's kind of like what I said back in the January panel at FarmCon. Figure out what you can afford and don't buy more than what you can afford, because that's when people get in trouble, is when they're buying stuff that they may want. You may want to spend $130 an acre on seed corn, but circumstances might dictate that you can only spend $85, and when that happens, you do it.
You're saying that because I know we struggle with it. You sounds like you're having you guys are listening to your ROI conversation, ROI per acre instead of yield per acre, and they're listening and responding appropriately.
100%. And we had some pretty good Iowa State data that came out talking about ROI on fungicides, and the $50 fungicide treatments didn't pay, but the $8 ones did. So, yeah. The number one treatment at the Iowa State fungicide trials last year was the full maximum rate of generic Quilt XL. The old proconazole azoxystrobin that is dirt cheap, but when it was a patented product, people couldn't afford it, so they used 7 ounces, and now everybody's putting on 14, and it works great.
Joe, you see anybody really dial back with this new See and Spray technology? I've been hearing some bigger ag retailers, kind of starting to kind of take a double, triple look here at how this is playing out. I think some guys were talking about 80% reductions in some of their chemical usage, and are you seeing that on your end up there yet, or always off?
I've studied See and Spray. Been to the field trials, field days, 7, 8 years ago. See and Spray is great for a grower with extra labor, but See and Spray does not fix the problem of an organization where the limiting factor is labor. And every retail agronomy center that makes money, their labor is an issue. And See and Spray slows you down. It adds time to the process, and it doesn't fix our problem, which is time. And time is worth more.
So if you're long on
more than
I see what you're saying. If you got a shitload of labor, you're saying, hey, it works great. But if you're short on labor, you got a problem still. Makes sense. Never put it that way.
Yeah, if everything goes smooth, we've got customers that they'll do all their own spraying and they'll save the application fee and we give them a discount when it's cash and carry. And when it does go great, they'll say, hey, I'm out of time. Go spray that for me. Yeah. And they'll pay our application fee plus extra margin for running through our equipment. And it boils down to time. We got to grow this food. And if we're going to grow this food, we got to do it on time to do a good job. And I don't know any farmer that wants to do a bad job.
So let me ask you, Joe, where's automation going to fit into this labor issue? I mean, it's as a talking point, boy, it sure is there. Are you seeing anything that, because, I mean, Kevin asked that question because we thought it was going to be a time saver plus a cost saver, obviously. But are you seeing anything that's practically saving you time on the farm that's recent technology in the last 5-10 years?
The biggest thing we've done in the last few years, we used to, and it's still the best as far as being able to change. We would mix in the field. We had mixing stations on the tender equipment, and each field could be just a little bit different. The guy operating the sprayer is sound in agronomy, and he say, hey, we need to throw a little extra of this or a little extra of that. Now we throw that stuff onto the tender truck, and everything is automated at the plant. You got one guy doing the mixing and sending hot loads out to the sprayer at 15 gallons to the acre, and it just goes faster that way. It goes faster that way. Plus, if you're having a mix in the field and your tender truck driver is a 72-year-old retired guy that just wants to work 3 weeks in the spring and get a little extra spending money, or 6 weeks in the spring, he's not going to want to sling boxes and get hot and sweaty because he can't. He's past that. So you can have that guy just drive back and forth to the field. But that's been our biggest efficiency is automating that. And along with that, our accounting system is set up with the automation to where when we make the blend ticket, it comes out of our inventory. Our people can look at the report and say, okay, we got this much sold, we got this much in inventory, this much came out today. You can plan ahead, so you're not calling your manufacturers saying, hey, how fast do you get me something here? You plan ahead and get it there quicker, one time.
So let me ask you this, Kevin and I. We love having this conversation and argument. AI, and are you doing anything with AI, not writing your own code, but I mean using it with sophisticated prompts to do anything to bring all the data into one platform? Anything that you're doing with AI that's adding value to your bottom line, yes or no? At this point,
no.
Yeah.
Damn it, Joe!
Oh, I love it. That's me, Joe. That's me.
Do you remember the exercise that we had at FarmCon last year with AI and who was doing it and who wasn't? And it was basically you got to be putting a lot of stuff into your AI model to get anything valuable out of it. And we're not there yet. We're not there yet. And maybe we need to be. I will say something. I'm building a house. My daughter, Mary Pat, she's in our office now too, Kevin. And she left her job at Nestle and moved into the house she grew up in with her husband and now 3 daughters. And she comes into the office every day. And so I'm living in a double wide trailer while we're building a house. And my wife is got some AI program, and she will design a room and hand it to the carpenters and say, "This is what I want."
Oh, that's cool.
Yeah, they love it.
I will say that AI rendering for that stuff's been great. Yeah, we do that on some properties too. That's been pretty cool. Sure. So. And
Mary Pat, she was in HR with Nestle, and she came back. She implemented some great programs for our payroll, the way that the folks clock in and clock out, as they can do it from their phones now, and it geolocates. She's up on all that stuff. A few years ago, what really helped us get going in wholesale is we initiated an email address for all of our purchase orders that our customers wanted to go through, and trained up multiple people to process those. So that orders email gets looked at every 5 minutes all day long, and doesn't matter whether you're in California or New York, somebody's checking that thing out until 7 o'clock at night Central Time. So we can have things scheduled so our customers get better service by sending their POs into those email inboxes.
That's cool.
And, yeah.
So let's go back to your little business insight for you, how you scaled properly without blowing up. I mean, you went from a local custom applicator in 95 to boom where you are now and stuff, while you still owned your acres in Iowa. I mean, what was the single biggest operational or financial system, or, what did you have to do to make this pivot so things didn't, keeping things intact, and running, not blown up? What do you view as your biggest successful move back to scale?
I took plenty of quiet time to think about it with the person that helped to implement it the most, which was Chris Knowles, and then decided to do it and said, what do we need to do to make this happen? And then think through it, and then launch, make your mistakes, re-go, make your mistakes, go again, and just get better every year. And the stuff that's working, do it again. The stuff that's sticky, quit doing it.
Yeah. Then go ahead, Kev.
No, I agree. I mean, it may sound like simple advice, but I'm telling you, it's great advice, and that's what you have to do. I mean, it's blocking, tackling.
You just got to decide to do it. Yeah. If you decide to do it and make a plan and execute the plan, then you'll learn from the parts of the plan that don't work. I mean, and I don't know if you guys know this, but I had a business failure in 2007. I launched Quality Power Sports, and we were a full-service boat dealer, sales, service, rentals, and we also did ATVs and UTVs, and man, we had a nice showroom and warehouse, and the bankers came in with their suits one day in 2011. They go, "What's your plans for this place?" And I threw them my exit strategy. I said, "I don't think this thing will ever make any money because it's so far off from the pro forma stuff that I put together when we were launching that I'm just that bad at it, so we're getting out of it." And they go, "Oh, that's good, because we were here to tell you that if you don't quit Quality Power Sports, we're not going to loan you any money for Quality Ag." So we were all on the same page. And it's appropriate, I think, that when I sold that property that had the showroom in it, it became a funeral home.
Oh wow, that's great.
Yeah. A dead boat business is where they're crematorium and funeral parlor. So,
Joe, give Give us the bullet point skinny on what you learned. What did not happen to make that successful?
I didn't have a passion for it.
Yeah.
It was not my passion. And I did it because it would be fun and it would be cool. And it was fun, getting up at 5 o'clock in the morning and getting the boats all ready to rent out on the lake. I had the concession for rentals at a resort, which that part did make money. That was the only thing that made money. But I didn't have a passion for it. I would have rather been in the sprayer. So, work on boats till 8, 9 in the morning, go jump in the sprayer, go to your office and go back down to the lake and fuel up boats, and then get a report from the manager about how many sales it almost got. And I had a really technical flaw, a big mistake that I made, guys. I had an assumption that if I had all this beautiful inventory near the place where people were going to use it, which is our lake, that they would shop and buy. And that was an incorrect assumption. People don't buy their recreational stuff where they use it. They buy it where they live. So everything I sold, you could buy in Des Moines or Kansas City, and the guy from Des Moines or Kansas City come up, shop at my place, and go back to Kansas City and Des Moines and buy it.
That sure reminds me a lot of my last few years in business at the golf shop, when I stocked that thing full and everybody come in with their own sets of clubs from the discount stores and stuff like that. So, it's a tough one there, man. And but then when something breaks, they want you to fix it though after they've bought it somewhere else. So it is what it is.
Yeah.
Let me move to, you guys also sell crop insurance, I believe. You still do that, Joe? You got in the crop insurance business?
Yeah, we've got a great crop insurance lead, our specialist that steers all of our agents into the right direction. Obviously, everybody goes to the classes every year and does their continuing education. But there's a big difference between selling crop insurance and helping growers manage risk. And
that was my question to you, managing risk. I want you to talk about that. What tool, besides that, along with that, but besides that, what's the most proven valuable tools that you're using to keep things stable through volatile, cycles like this that have been successful for you and your team?
I think that the most critical thing is diversification. So diversify geography, diversify crop, diversify livestock and crop. But you don't want to just plant all one hybrid on every acre in one township. You can do that, but that's not a very good risk management strategy. The risk management strategy would be to plant 2 or 3 different varieties in 2 or 3 different counties and make sure that if you're going to have a problem, you're not going to have it everywhere that you farm.
Are there people that actually do that? I'm sorry for sidebarring you on that one, but I didn't know people did that. One variety on all acres. That happens.
Oh yeah. People do that.
Anyway,
our customers don't, but I don't know. You guys remember when the Pioneer had that hybrid 3379? That if it would have been its own seed company, it would have been the largest seed company in the world. It was way the majority of Pioneer's number, and guys planted on every acre 3-4 years in a row and couldn't believe how good it was. And then gray leaf spot came in, and everybody was planting something else, made 190 bushel corn, and theirs made 150. So,
well, down here in our neck of the woods, Joe, there are a lot of guys. And even when I was a kid and all the way through the years, there's a lot of guys that run the same variety on all of their ground. So I don't think it's that unusual. Like Todd, maybe up there where he's at, they see some more variations. But, down here you'll see some guys run the whole thing, like you're saying. And I'm with you, Joe. But again, Joe, some guys just can't diversify. They're running a family farm. They've been in the family forever. They got 500 acres, and they're in the same township. That's just where they're at. So, but you're talking about bigger operators. But, and I agree with you. Get diversified as you can. Makes sense what Joe's saying. Yeah. So. For the guys,
it just helps. It helps you mitigate risk if you can have some diversification.
Yeah, for sure.
All right, Joe.
There's a big advantage to do the same thing until it quits working, though. That's
you're right.
So I want Joe Sinclair's advice for the agri-retail community out there. What's one big opportunity or landmine you see for independent retailers and growers the rest of the season, or maybe even heading down the road a year or so? What do you keep an eye on from a sharp business mind, as a sharp business mind?
I think you gotta be looking at managing your commodity purchases, which would be fuel and fertilizer. It's going to be critical to manage those as well as you can. Most of the people I know got their fuel bought for this spring at least, but there's a lot of guys that don't have fuel bought for fall, and it's going to be a hand-to-mouth deal on commodities until the price crashes. And nobody wants to catch a falling knife, but once this war gets over and once the world gets back into equilibrium, there are going to be inventories of stuff that people will pay you to get rid of. You remember when, it hasn't been that long ago, when crude was below zero, they would pay you to park it. What was that, 6 years ago, 7?
Yeah, for sure. Remember at the beginning of COVID, and hell, that thing broke and it just kept on trucking. And I was talking to Andy, some other guy. We're like trying to figure out where the hell we buy all it, where are we going to store this shit. So I'm with you.
Yeah. Yeah. We're in a cyclical world, and all you have to do is be patient, and it'll come back to you. You know, there will be times when it'll be so good that you'll think it'll never be bad again, and it'll be followed by a trough where it'll be so bad that you can't remember when it was ever good. And that's just the nature of our business. Right now, our beef prices, record high. Yeah. Anybody that's got a cow is enjoying profits that are enabling them to pour concrete, to upgrade equipment, upgrade genetics, doing all these things that they really would have liked to have done, but their budget constraints kept them from doing it. So that is the high end of it. But it won't last forever.
But we know what's going to happen, Joe. We know what will eventually happen.
Yeah. Yeah. And I've got the fix for the high beef prices. And this is, take this to your legislators. We can fix high beef prices by making a deal with Uncle Sam that if someone will put breeding stock on CRP and they don't have to pay back the contract when they take it out of CRP, that's where we're going to grow the herd. We're not going to grow the herd out west. It's too risky, too much of a chance for drought, and all those cowboys are gone, all the watering systems are gone, and it's going to cost too much to get everything back up and running. Our growth in the beef herd is going to come in Kansas, Missouri, Iowa, Nebraska, and the Dakotas. Let's get rid of the CRP, lowers the deficit when the government isn't the tenant. And I've always been a production guy, so CRP is an antithesis. You know, when we were growing up, Kevin, CRP was not a conservation program. It was a commodity assistance program.
Oh yeah,
you know that's what it was, and it's just recently been called CRP. But let's just get rid of CRP and let the farmers farm it, repopulate those areas of the country that the biggest crop in them is CRP, and put cows on those acres and let the beef price fall where it may.
It makes sense what you're saying for sure, especially if you really are looking at it as a conservation program. I mean, run the livestock on there and let them bring back the ground, and like you said, I mean, it would play hand in hand. That makes sense, Joe.
Yeah.
Oh, that's good insight. Good insight. Kevin, I got nothing else, brother. You got anything else before I let Joe have the final word?
Yeah, we've taken enough of Joe's time. No, hell, it's all been great. So yeah, as always.
Well, I appreciate you guys. The only thing I might add would be we talked about building a team and succession. One of the things that I have seen when folks fail is when they build a team and they ask them to do something that they don't know what they're asking them to do. So I think if I was going to give advice to somebody that was going to be trying to build out an organization, you need to know what it's like to clock in and push the broom. You need to know what it's like to clock in and shovel the grain. You need to know what it's like to clock in and drive the truck, so that someday when you're a leader, you won't be asking your team to do something that you don't already know how to do. And you won't ask your team to do something impossible if you've done it before and you know how to do it. So that'd be kind of what I would leave the discussion with. That's if you're going to build out an organization, you're going to build out a team, make sure you know what every player on the team is going to be looking at when you ask them to do it.
Perfect. Well, man, we greatly appreciate your time. I wish you a safe rest of the planting season, rest of summer. We'll keep in touch, and thank you again, Kevin. Thank you. You guys have a great day, man.
Yep. Talk to you, Joe. Stay in touch, buddy.
Take care. See you. Bye now.
All right, bye.
Bye.